All right, we are live. So earnings just pushed the market higher in certain areas, but APLD just lost a critical support. And we went live breaking down just a few minutes ago how to use AI to help you analyze deals in real time. And the replay is totally live. So if you haven't checked it, go take a look in the link below. We're going to jump right into here. There's a myth that I think a lot of people think is they see the support levels and they just assume that the support is going to be like concrete. Okay, it's a concrete floor or something. But what I've found in my experience investing is and trading is the support is just a maybe. It's only as strong as the next buyer that is there. And the point at the chart where you have a support level, yeah, a lot of people would think that it's going to bounce, but it could also be that you got to watch other indicators because technical analysis is one key, and a lot of mistakes that people make is they focus only on one indicator, and you can never rely solely on one indicator. Um, so let's take a look. APLD stock, how's it going? So overall intact over the last year with their uptrend. They've been very consistent. We've seen them holding this support level, doing a very good job holding this overall trend. But what about today? You know, they recently just dropped below levels that we haven't seen them reach before in the last dip. And so let's talk about what that looks like here. You know, we had a really good day with TSSI. TSSI was up. Some of the other AI data center companies were doing fairly good. But look at this. They dropped below, APLD dropped below this $30 price point. Okay. So we saw them started to recover. They were looking to break out, and they did find a previous level here, but it was still, they weren't establishing a very strong support at 30. They were touching 30, but really they were dropping a lot further than 30 still. Even it really never became a super solid support there. But they're definitely still in the overall uptrend here. What do we think of the CoreWeave earnings today, says Elvis? Yeah, so CoreWeave, CRWV, just came out with earnings today. All right, and we could see if we let's just go here to let's go look just via let's just search up CoreWeave again, CRWV. So if you look at the stock recently, just today, for example, they came out with their earnings, and what we noticed, there's a lot of different articles. I already kind of touched on this a little bit, but the earnings report, they had a wider than expected loss. Okay, so slightly topped estimates though on the revenue. They looked good, but the order backlog grew there as well by about 20%. So outlook looked pretty good actually, but they had a surging capex, capital expenditure. That's another one of the articles. I think they projected to double to about 30 to 35 billion dollars in expenditures, and that surged quite a bit. But look, when you're looking at that capital expenditure, Elvis, that's one thing, but also the revenue backlog also surged to $66 billion in their backlog for revenue, and that was previously 15 billion. So they just basically 3x'd their revenue backlog, even though they did have a net loss in the last quarter, 284 million. Hey, you know, they still surged in their backlog to 66 million. So, you know, there might be a sharp recovery potentially on CoreWeave. But here's the thing with CoreWeave, you know, is CoreWeave also IPO'd recently, and they're still seeing some tapering down from the big hype they had with IPO. So we might see them sell down further. But here we are, APLD. APLD was looking to hold 30. They couldn't quite hold $30 a share. TSSI did good. Some of the other data center companies did all right. But as you could tell, APLD sold back down to the support level at 27. This is a key level here that we were watching last week. And so they did end up jumping back down to that $27 price point, and now they're at a support level. APLD recently lost investment from Nvidia. But if you were to look at their market cap, $8 billion right now. I know that it looks a little concerning, the fact that they lost their market cap down to 8 billion, but their current deals are well above the mark of about 15 billion, and their revenue is up to 177% gain. So look, even though they have seen Nvidia, there's a lot of articles. There's another article there, and I don't want to look at the hype articles really at all. But you had Nvidia exit out. Current fair value without any other deals, um, or without factoring in the materialization of their long-term lease revenues of about 16 billion, APLD's fair value, when I ran some estimates earlier today, was right around $25 a share. And so when you look at their fair value around 25, that means they might sell down further, but it doesn't mean that's going to be where they hold, because a lot of times these AI data center companies are, not only is that not accounting for all the revenue that they're pricing in for, but also you have AI at the tailwind of um, of APLD, the wind at their back there. So they have the ability to also keep their uptrend. So they have an uptrend here. So even if they sold down to 25, they would still be well above their 200-day moving average. So it's not something that would be alarming. In fact, it's really healthy. It's really good. And it also presents really great opportunities. The reality is when we started covering it, around $6, and it was down around $3 a share about a year ago. I do remember, looking at this. It was right here. We started kind of covering it 2025 February, and I remember it dropped down to $3. At that time, they were still building their momentum, and they built their momentum now. So even though they're selling down on the greater trend, they do have a support level at 27. You can see this level here, back on excuse me, back on the 22nd of February. That's where they found a support. Rich says, "Oh, surprise live session." Ah, man, we're here, of course. Good evening. Art says, Rocket Lab. Yeah, we can take a look at that as well. So once again, just to review, financials looked pretty good. I was looking at the prophecy projections as well on APLD just a few moments ago. They're pretty mixed, but still leaning bullish over the next month. You have some that are a little more conservative, around negative 1.5% over the next month. But Gemini and Grok, Grok looking as bullish as about 9% gain over the next month, according to prophecy, when we use these AI models. And so Grok has some bullish projections for APLD. Their nearest support, once again, you can see that solid support level we just pointed out there around 26, okay, 27. And so if we were to look right now, you can see it's right there. That's where they're at, this $27 price point, kind of potentially a double bottom. And potentially they sell down to 25, but ultimately the trend right now is sideways. So they may find support here, reverse back up to 31. That's a 10% margin for profit. But they haven't indicated that yet. They might continue to sell and steep down here into that 25. That's also possible. But the nearest support level to watch right now, right around 27.50 for APLD. Okay. And then RKLB, yeah, we can definitely take a look there. CoreWeave. So CoreWeave, can it hit $80 or $65 support? Says Guitar Bass Singing. Free cash flow is abysmal, tons of debt, lots of competition, so many data centers. Oracle, Amazon, Google, Invis, even Nvidia has data centers, all trying to take each other's niche. Yeah, CoreWeave still has a lot of first mover advantage, but CoreWeave, I've said this for a while. This is why we don't cover CoreWeave. We would love that they are one of the top partners with some of the companies, like for example APLD, and they are spending, as we just mentioned. They've increased their backlog massively. So they just jumped their backlog from 15 billion to 60 billion dollars. Even though they had a net income negative, they jumped their revenue backlog to 60 billion. So CoreWeave's doing fine. But the thing is CoreWeave recently IPO'd, and they're still dealing with the IPO after effects of the hype where they really ran up, and they're still like selling down. So I don't analyze it from a technical perspective on resistance, support, anything like that, because ultimately it just hit the market, and um, actually I was expecting to sell down further. We kind of talked about this. This was the last thing we did. So it was right here. It had just sold down February 20th, last time we analyzed it. It was down to 87, and I said, I think it's going to make this run up here to 100, basically, is what I said. Oh. And it did make that run. It jumped up to 100. You can see that that level was filled right here, up to 100. I don't know if you guys have met Loco. You guys know Loco? This is what he looks like. This is the Loco. What's up, buddy? He's a huge cat. He's an absolutely massive cat. He climbs trees. He's like 20 pounds. And so this resistance level was still a resistance level that we mapped out around $100 a share for CoreWeave. They hit that level, so they made the move we were anticipating up to 100, but then they sold back down here. You can see once again, and now they're back down to the support level at about 87. Really, that's where CoreWeave is. So maybe, hey, maybe they consolidate further, just like we were talking about with APLD, the sideways movement. We see them find that support, continue up, quite possible. Institutions could be watching that. But look what we were pointing out in the greater trend. So that was something we pointed out a few weeks ago. But take a look at the greater trend. I was actually anticipating this for CoreWeave, that it's kind of like this, that they might break out, but that they might do this and sell down all the way to like $30 or $40 potentially. So that was actually in the books. Is like I was like, maybe this could happen. So, because they just IPO'd, and back to where they were at IPO, be around $40 a share, somewhere in there. So that's why I'm not super bullish on CoreWeave, because they just IPO'd. Hopefully that makes sense. It's just usually companies lose a lot of value after IPO. Milo says, why did Nvidia sell? There was no indication of why. There was no indication. There was a little bit of indication. All we basically heard was for allocation into company, for their own allocation into their company. That's all we heard. There was a Forbes article I was reading. There was really nothing. It's a hard to ignore story, they say, but balance sheet, they're saying the balance sheet, they're like, everything looks fine. Bull case actually is looking good. Look at their backlog, $16 billion. Their current market cap's at $8 billion. Their unit economics, significant positive indicator. Valuation metrics become more attractive. Trailing PS ratio of 40x appears expensive relative to S&P 3.4, but trailing revenues are poor indicator in this case because they got projected revenues to increase big time. And so, like, when you look at actually what's going on with APLD, there's no indication that there is any red flags from an economic perspective, from a backlog perspective, or really from a product perspective. They're building those data centers over in North Dakota. They are still constructing with the liquid cooling, and they have the wind and solar power that they're powering the data centers. So the backlogs look good. Yeah, I mean, it's just, there's no news really on that. It's just what it is. They sold out. That's what they did. And so, yeah, I'll continue to hold APLD long term, just so you guys know. I don't know if that's helpful. And it's not an indication of what you should do, but it is what I do. I think that they long term, they've been very good. I've rode this stock up 40%, back down 40%, but overall, it's been a great play. And again, we've been in it and covering it since around $5-6 a share. It did dip as low as 3, but yeah, it's up to 28 right now, and it's right at a support around 27.50. So once again, like, I'm not looking at it and saying, oh, this is a buy right now. It's still indicating some downward pressure, holding below this EMA, this blue line, and struggling to find a support. No real indication of a support. Little bit of bounce towards the end of the day here, but if we see it bounce the $28 price point, starts to make this move back up into $30, then we're saying, okay, let's take a look at APLD continuing that broader trend that it has going here. where it's seen those $40 levels to $50 levels. But currently we're just consolidating around $30 a share. Dean says, ended up getting into TSSI this morning after the sell-off, looking good after hours. Yeah, man, awesome. Yeah, TSSI is up 4.5%. They're having a nice recovery. We saw them bounce very nicely. I'm super bullish on this company because what people don't realize is all these data centers are going to require a tremendous amount of configuration. It's not like you just spawn data centers. And TSSI actually configures data centers. They're small, $250 million market cap. Some of the projections, I'm telling you, some of the projections over the next year on some of these data center companies. I mean, look at this. Where do you see 45% potential gain according to Gemini, paired with all the data that we give it that I consider? Inside a Prophecy app here, we're getting a projection of up to 45% over the next year. I mean, these are some of the projections. Now, it is volatile. I've seen a lot of volatility. If you look at all the models here into the short term, it's like, whoa, which way is it going? I've been relying quite a bit on Claude. Claude's a little bit more bullish than all the other models. You could see that. But I will say from an accuracy perspective, consensus wise, we're seeing pretty flat projections in the next month. But things start to look bullish more towards the 3 to 6 month to 12 month. It's just, the AI data center markets are volatile, but man, the revenues, there's no red flags that I saw from any of the reports that came out today. Really, no red flags. I mean, there's a little bit of concern, I guess you could say, if you look. Let's go into Google and let's just see, like, what are the main things that people were talking about with Nvidia. Because Nvidia, basically their guidance blow past Wall Street's forecast. The shares rose. Future outlook surpasses their forecasts. Blowout earnings. Report disappoints Wall Street, they say. Earnings stellar results, but Wall Street disappointed. Shares fell 5% even after they had good earnings. Yeah, I mean, honestly, they're all crushing it. All of the financials look so good. I mean, people are like, oh, they're only increasing revenue by 100% year over year in the trillions of dollars. What do you want? So I think it's just a matter of identifying the bottlenecks in a company. And when it comes to the AI markets right now, the only bottleneck that we have is a time bottleneck. Like as of right now, there is not an issue with the demand. There's an issue with the supply. Okay, so it's like how much time until supply eventually potentially reaches the level at which there's demand for AI. We're still not even close. Yeah. Okay, Nvidia has no growth, projected stagnation for the next 2 years, not growing, so cannot pay the growth multiple. Nvidia revenue growth has slowed down. Their revenue growth has slowed down? The revenue growth. Okay, yeah, they're still growing with their revenue. But look, I mean, 35 billion. I mean, dude, their revenue growth is up 62% year over year. So what is slowed down? Annually before that, they were over 100% year over year, and now they're only at 62%. Yeah, I mean, they're the number one company in the world, growing at 62% year over year. It's like more than doubling every year and a half. So I wouldn't really worry about slowed down. I think if anything, you're looking at the net income was fine. You're looking at the margins. One thing you did see quarter over quarter, while the assets were going up, their liabilities were going up a little bit as well. So their liabilities jumped about 40%. But overall, yeah, I mean, if that's not revenue growth enough for you, brother, I mean, it's a great growth engine in the long term. Yeah, I have no red flags about Nvidia. We're all using Nvidia right now to tune onto the slide stream. We're using Nvidia to use Prophecy to get these projections. Gemini is using Nvidia. Grok is using Nvidia. ChatGPT is using Nvidia. Claude is using Nvidia. All these companies are relying on Nvidia heavily. still. Yeah. All right. Thoughts on CTM earnings? Yeah, earnings on CTM. I just did a full video on this earlier today, so go have a look. Um, you could just go to my videos, go here, go to our recent video link, and I just sent it in the chat for you there. So if you want to go watch that full breakdown on CTM stock, very short overview, very great financials. If we were looking at Prophecy AI as well, let's pull it up, CTM. Let me pull up the financials. The financials you can see are growing in equity. Their equity has gone from 12 million in 2024 to 37 million. Their liabilities have been dropping, see the orange going lower and lower, while their assets have been increasing. And then not only that, but their income statement has been looking really good. Quarterly, it's looked pretty good. They did come in with pretty good revenue. The revenue was just a tiny bit negative net income, but they've secured some serious deals. I don't know if you guys saw, but CTM locked in over $200 million in contracts. Their market cap still sits at 83 million. So they currently have nearly 3 times their market cap in contracts. I think that is just an indication the company is going to grow more. From an institutional perspective, it's not looking like there's a lot of institutions buying in just yet. So I believe there's no hype on this company, and we found it early, and that I hold it long term. I think I have about 5,000 shares of CTM that I hold in my Schwab portfolio. I definitely have shares, but I think I got about 5,000 or 5,000 bucks of CTM. And I don't say that you should buy that or anything like that. It's actually quite a riskier one because their market cap is so small at 83 million. But with the financials increasing and growing and their assets jumping to 46 million and their income statement, if you look at their income and their annual growth now, they're doing 50 million with 100 million in the back or 200 million in the backlog. All those numbers accumulate to much greater than that of their current market cap. And we've seen them get up to 200 million plus in market cap. And when they have, it's happened very quickly. And it only takes a few institutional investors to jump in to take this stock to $2, $3, $4. And so that's kind of why we hold CTM. I love trading it. I had the time of my life trading it. When we were in Miami visiting before we went to Argentina, or no, we just got back from Argentina. Not in 2025, but in 2024, or no, beginning of 2025. We went to Argentina twice, I think. I gotta get my clock right, but we got into Miami and we went to a cafe, and I was eating like some hollandaise sauce on some like gosh, what was it? What are those? They're not biscuits. They're like my favorite. They're not biscuits, but they are biscuits, and they got an egg on top. Um, and they put hollandaise sauce on it. What are they called? Oh, eggs Benedict. Eggs Benedict. So eggs Benedict with like some waffles or something and a coffee, and we were trading CTM in our daily live trading session as we're there every morning at market open Monday through Friday. You guys know we're there every day. If you're in Stockmates, you know what's up. Trading there. And it was 9:30, so not 6:30 because it was Eastern time. It was 9:30 and we were trading CTM, and we caught a move on CTM from 90 cents a share to $1.60. This move, this was it. Here we go. February, I said it. February 2025. In one day, we saw this stock go from like 90 cents basically to 170. It was a 75% gain that we were able to make on, well, no, we didn't catch the full 75%. We caught about 50%. We made like, I don't know, 3 bands, $3,000 while we were eating breakfast. Yeah, dude, some eggs Benedict. Best eggs Benedict ever. Never forget. I had some really good eggs Benedict. One of the other ones is called Monterey Bay Cafe in Monterey. It's one of my favorite too. Shout out. Okay, so yeah, revenue percentage growth is constantly slowing in every corner. Yeah, yeah. I mean, you got the percentage growth. It makes sense if they're a mature company. I'm not arguing with you there. Um, all right, let's see. Taser Lord, can you pull up MFG stock? What do you know about it? I know nothing about it. MFG. Let's take a look at MFG. So MFG is surging to $10 a share, and it is recently just, I guess, over the last few years, just absolutely been crushing it. So, what do you know about this stock? Do you know anything about it? Let me jump into it. MFG stock. Let me do Prophecy AI so I can get a better look at this. Okay. Yeah, so the net income, kind of a shaky one. Their liabilities are really high. What is this company? MFG. Well, let me see. They're a holding company which operates provisional financial services such as banking, trust banking, securities, others. The company is headquartered in Tokyo, currently employs 52,000 employees, and works with some other companies. All right, and non-Japanese companies. Okay. All right, so just based on the financials, liabilities are really high, but net income's positive. It looks like some of the projections, we can take a look. Near support at $8.50. Does that line up? Yeah, that lines up. The prophecy is saying near support at $8.50. So that's going to be right here. That looks about right. Prophecy AI, telling you. This thing uses the exact same AI or the exact same systems that I use to analyze stocks. And it literally just pointed out that support level perfectly. What's the nearest resistance? Let's ask that. Let's see. Nearest resistance at $9 a share. Yeah, so okay, so that's where it is right now. This actually makes a lot of sense. So you see this resistance, support now acting as a resistance right here at $9 a share. So it's at a resistance. So yeah, it's kind of trying to break back up and continue their uptrend, but they have a resistance at $9, that previous support. They break above, then the target's up to 10 or 950. And if they don't break 9, then you got 850 basically as a support there. Hopefully that's helpful. From a value to the world perspective on MFG stock, like what do they actually do? I have no idea. $100 billion, $1 trillion in income, net income positive 329. They have a lot of liabilities, but I guess they still have equity, billions. Let's take a look at their website. Okay, I'm gonna need a Google Translate or something. There we go. Okay. Um, yeah, so when it comes down to the news, you just have to realize that companies that are in the financial space invest a lot. They have a lot of assets, they have a lot of liabilities, but the actual value that they're bringing to the marketplace is only to the extent of which the capital they basically loan into the marketplace is. Like that's the value they're bringing. And so you're not going to see anything crazy. It might be very consistent in that they grow very, very gradually. And also, just looking at their financials, they do have a gradual kind of growth, and it kind of reflects their financials, looks very similar to how their stock looks. It looks kind of just this gradual uptrend over the last few years. So it looks overextended right now. It looks like it's correcting back down, and it has a support at 850. And the 200-day moving average is usually where it tracks. So you can see the 200-day moving average, this green line, most stocks would be holding just above 200 days. the moving average. See that green line back into 2023 or 2022, 2023, 2025. And then it was right here when things started to really separate in July of 2025. And then they got way above the 200-day moving average. Now they're starting to correct back down. So to see them even sell back down into these levels of around $7 a share would be not absurd at all, because once again, they usually track that 200-day moving average. So they're way above it. They're most likely going to sell back down some more, I would say. Based on what I see, I didn't see any like groundbreaking stuff. It mostly just looks like financial company, and that could be a potential 17% sell down. So just be careful. Yeah, I don't know a whole lot. I'd have to spend some other times looking at it, but hopefully it's helpful for you, man. Thanks so much for tuning in. Wholly overbought stock, LOL, says Milo. Yeah, I would agree. Yeah, it's way overbought. If you take a step back and just kind of look on the time frames here, just look at where it normally tracks, and then just see how the RSI here and the MACD are way overbought. So you got the MACD here just way up at the top, so it's starting to cross over. So you're probably looking at more of a reversal. Same thing over on the RSI. You can see that blue RSI here, and you have this this overbought zone. And so while it is up, it's got a consistent uptrend. It's most likely going to correct just based on what we just went over. Yeah, it looks like it's correcting right now. And when it does correct, it's not small. It can correct from 6 back down to 3 like it has in the past. That's a 50% sell down. So imagine it did do something like from 9 back down to 5. That's quite possible and wouldn't be absurd. Yeah, so hopefully that's helpful, man. Yeah, be careful. It may fall hard. It may fall hard. But hey, if you're really long term, it seems like they got a good growth trajectory, but I don't know. It's a little sketchy too, investing in financial companies at this point. So much is being disrupted from crypto, and so much of the financial markets rely on just like loaning out money and cash and things. And when cash or currencies are devalued and sometimes unstable, then you could have like their liabilities are already very high. Look at that. See, they have so many assets, but look at that orange, how tight it is with their liabilities. You compare that to a company like APLD, for example, and APLD would have a lot more assets. There's a lot more space between the liabilities and the assets. So yeah, just something to consider, I guess. I wouldn't touch it probably. It depends on your goals and what you know. So I don't know too much about it. Cool. All right, guys. Hey, hopefully that was helpful for you. I appreciate you all. Just want to do a quick breakdown on APLD. If you missed it, we did a full breakdown on our AI prophecy here. So if you want to get your hands on the best AI models, there's a bonus right now where you get 1-year access to all unlimited models, and you get a one-on-one with me, and I'll go into your portfolio with you and work with you. On top of that, you also get the ability to join our daily live trading sessions. As I mentioned, we're there every day at Market Open. You want to watch my entries, watch my exits. It's going to be the first link below, take you to the video we just did about an hour ago, and then you can go into the link there in the description of that video, and that's where the checkout is if you wanted to tune on into our training tomorrow. We are there at Market Open and at 2 p.m. Pacific time. So appreciate you all. Thanks so much for tuning in. Go have a look. Simply take a look at that link below. Go watch the video and simply take a look at the link in the description of the video I linked there. If I earned a thumbs up again, hit the like button. Do consider subscribing, and I'll see you